Thanks. So how should you trade Latin America and Europe as we look beyond the World Cup final? We've got a guest with us now who's going to give us some tips on what to do with your money as the summer heats up and Wall Street dries up. Here with me now, JC Parets, Eagle Bay Capital founder and president. Let's pick up, though, on the Germany versus, let's go with Brazil. Because you're saying that there's actually a story here of protection and risk between Brazil and Germany. What is it? Yeah,
and I think it's fascinating. I mean, if you look back over the last couple of years, Brazil, we like to look at EWZ, which is the Brazilian Exchange Traded Fund that, we can own here in the United States. And it's been flat over the last 2 years, gone nowhere. It's had some ups and downs, but we're essentially flat for 2 years. While a lot of these developed nations, Germany specifically, United States, Japan last year had a great year. A lot of these developed countries have been doing very well. Germany, EWG, the German Exchange Traded Fund, up 60% in the last couple of years, with Brazil flat. I think that money flow is going to shift now into Brazil, out of Germany. We've been seeing it. Oh, absolutely.
Okay.
Yeah, we've been seeing over the last couple of months. Momentum bottomed out earlier this year, and I think this absolutely continues.
Even with all the problems that Brazil's economy has, I mean, 6.5% on inflation, I mean, poverty wages, you still think that, is it the Olympics? I mean, what do you think is going to happen?
Well, Cheryl, there's just a consistent, incredible between the economy and the stock market. They're not necessarily always tied to one another. I mean, we've had our unemployment problems here in the United States. We've had plenty of problems, yet the stock market is up, an exponential amount over the last 5 years. So there's a huge disconnect between the two. We like to focus on price earlier in the year, momentum in this particular ratio. And I want to stress that this isn't, hey, just buy Brazil blindly or short German blindly. This is, we want to, for every dollar that we own Brazil, we want to be selling an equivalent amount of Germany. And we're essentially going to play that spread.
That's a very strong call on your part. Very strong. And there's your reasons why. Let me ask you this really quick. We're sitting in July right now. And obviously, there's concerns about volatility, that it could bottom out. What do you say about the month of July here in the U.S. and for all of us?
And that's a great question. And from a seasonal perspective, this is one of the biggest reasons why we want to maintain essentially an equities neutral sort of strategy. Because seasonally, which is why the pairs trade comes in with the buy Brazil, short Germany, because seasonally, we run 20-year studies, 30-year studies on the S&P 500. July, over the last 20 years, is actually down more often than it's up. It's the only month out of the 12 that we can say that for. And August isn't much better either. Although, it's up about half amount of the time over the last 20 years. On average, it's actually down over 1%.
The only thing that we're going to get in August is going to be the Alibaba IPO. At least we're going to have that going.
Yeah, and at the end of the day, I mean, if we're going to talk about that, you're adding more supply to the market. So, I mean, it's not necessarily a good thing. So, and volatility tends to bottom out in July as well.
Don't cop out on me. Argentina or Germany?
We'll go with Argentina.
Argentina? All right.
We'll stick with the fade Germany trade. How's that?
$5, buddy. All right. Thanks, JC. Good to see you.
Thanks for having me.